Hello, everyone. Happy Friday. So today we are doing our weekly recap for the week ending March 14th of 2025. So lots going on this week. So I'll just give you some of the highlights that I think that were important. So one of the biggest trending stories from this week was Southwest, right? So they made a major announcement earlier this week that they will start charging checked bags fees. So they have been in business for over 50 years and they have never ever in the history of being in business have they ever charged checked bag fees. And now that is going to change. So in case you did not hear about this, starting on May 28th, for any flights booked on or after that date, will be charged or subject to checked bag fees. Now there are still some ways you can avoid paying a checked bag fee if you do decide to fly with Southwest. So you would either have to fly business select or be an A list preferred customer. So, in order to meet that qualification, you must fly 40 one way segment flights or earn 70,000 rapid reward points. So, you would qualify for two free check bags if you do reach that status. Or if you do fly business select. Now, you can receive one free check bag if you are an A list member, which is the next tier down in their rewards program, or if you do have a Southwest credit card and all of their cards are backed by Chase. So, outside of that, if you don't fit into any of those categories, you will be subject to a check bag fee if you do decide to fly with Southwest. Again, it is for flights booked on or after May 28th of 2025. Now, as of right now, we do not know how much the check bag fee is going to be. That has not been announced yet, but I'm sure that information will be soon forthcoming since we're only a few months away from May 28th. So, of course, lots of unhappy Southwest customers have posted content. They've posted on social media. They've posted blogs. They're commenting on the videos. And they are just not really happy. For many customers, from the feedback I have seen, they said the free check bags is the only reason why they chose to fly with Southwest. Outside of that, there really were no other perks, benefits, or loyalty reasons to fly with them. So it will be interesting to see how this impacts their bottom line. Now, in case you didn't see, the CEO of Southwest did make a statement, and it was a very interesting one. To kind of summarize it, he mentioned that they essentially are looking to make the company more profitable. That's really what he said in a nutshell. And truth be told, Southwest has been struggling financially for quite some time. And so they're trying to find ways to generate revenue and increase their revenue. So I'm sure it was not an easy business decision for them to make this change, right? One of their taglines they've been famous for is bags fly free, right? And so now that will no longer be a thing. And they've made other changes too that customers are not happy about. Some are saying that it's giving spirit, right? They say that without the free check bags, Southwest is now beginning to feel like they're operating in a similar fashion to Spirit Airlines. And as you know, Spirit Airlines is notorious for bad customer service, charging you for everything. And but the trade-off is their flights are cheaper. With Southwest, though, depending upon where you're flying in and out from, their flights aren't all that cheap. So I think for many customers, if the price point is comparable to another airline like a JetBlue, Delta, United, and now I have to pay for a check bag, they may take their business elsewhere. But what I will say, even though customers aren't happy, Wall Street is quite happy. If I go back to my notes here, the stock was up about 2% since they made the announcement earlier this week. So by close of trading today, March 14th, the stock price was at $31.73. So Wall Street is happy with this news. They're happy that the company is trying to turn things around financially. So definitely mixed results in regards to the responses to this new information. But of course, shareholders, profit is king, cash is king. And so, of course, they seem to be happy with this information. Um, second thing we will talk about tonight is tariffs, right? It seems like this is going to be an ongoing conversation. I think most of us have not thought about tariffs like this probably ever in our lives. But now it's something that's front and center for all of us because this is definitely impacting all of us in some shape or fashion. So, as you guys know, the markets have been very volatile since we've had these tariff conversations, right? We're putting tariffs on certain goods, we're not, we are, we're not, right? It kind of feels like this game of chicken, like I mentioned during last week's conversation. So we are essentially in a trade war with the entire globe at this point, right? So it definitely seems the trade war is a bit more serious with Canada, the European Union, and of course China. So last week we did a summary of what was happening, right? The tariffs were set to be imposed on all goods coming in from Canada and Mexico. Fast forward a few days, they decided to put a pause on that for another 30 days. But there have been lots of threatening conversations that have been had since we spoke last week. So, to kind of give a recap of what happened this week, Canada has officially began pulling all alcohols that are sold in the US, specifically sold made or manufactured in red states. And so some of their major retailers pulling those bottles off of the shelves, and they've also began to cancel future orders. So, of course, the American companies that produce those products are beginning to feel the aftermath of what is currently happening. And so they are concerned with what will they do with the excess inventory that they have on their shelves, and what is this going to do to their sales, as an organization. So lots going on there. China has so just to give a quick recap, so the US did in fact impose a 10% tariff on all goods coming in from China. That did go into effect. There was no negotiations there. So in response to that action, China then imposed a 15% tariff on American farm products, such as, hold on. They so they impose additional tariffs on American farm products such as soybeans, chicken, pork, and beef. And that's on top of the 10% tariff they had imposed previously. So lots going on there. So many American farmers are also concerned about what is going to happen to the demand of their goods from China now that these tariffs are being imposed. So to offset that now, let me just I'm trying to keep track of my notes here. Now, the additional 15% tariff that China did impose was in response to the additional 10% tariff that went into effect on March 4th. So just to kind of go back a few steps. So back in February, we did impose a 10% tariff on goods coming in from China, and that was in place. Fast forward to March 4th, an additional 10% tariff went into place. So now there's a 20% tariff on goods coming in from. So in response to that, that is where China began imposing tariffs on American goods, and they now impose an additional 15% tariff on American farm products. So just kind of to level set all of us, there's a lot going on here. Trying to keep track of all of it has been like a full-time job. So now if we fast forward to March 12th, which was, 2 days ago, that was Wednesday, the United States did go ahead and impose a 25% tariff on all steel and aluminum imports. Now, that of course is targeting Canada, since they are the largest importer of those materials into the U.S. So that has since then caused a trickle effect of more tariffs, more threatening conversations, and it really has just been one big mess. So, in response to this steel and aluminum tariff that the U.S. imposed, the European Union has now imposed tariffs on American goods such as beef, poultry, and bourbon. And they also imposed a 50% tariff on American whiskey. Definitely feels very targeted, right? And so fast forward to yesterday, March 13th, the administration is threatening to impose a 200% tariff on all wines, alcohol, spirits that are coming in from Europe. So that has just been a threat, but that statement has been made. So we're not sure when that will in fact go into effect. But this is not good for any of us, right? It's definitely going to be very tumultuous until some sort of agreement has been decided upon. And it doesn't sound like any of these countries are coming to the table to have this conversation. So, what I will say is to wrap all of that up, what that means is one, the stock market will continue to be very volatile. It will be day to day, hour to hour. When announcements come out, right, the stock market responds, and then it will be interesting to see how this impacts the earnings of companies as we progress through the year. So it will impact it in a few ways, right? So, one, for the companies whose goods are now being tariffed on their exports, right, that this now may cause a decrease in demand for their goods and services from overseas. But on the flip side to that, anything that's being imported in the US from a cost of goods sold perspective, it will cause their cost of business to increase. So this is going to definitely impact profitability. And of course not in a good way. So it this year is going to be very interesting to see how companies continue to respond to what is happening. I know from what I've seen from a professional standpoint, companies are becoming very conservative on how they are spending. Companies are beginning to brace themselves for for what's ahead. There's so many unknowns, and so we've already kind of gone through a pandemic. Not kind of, we have gone through a pandemic, and companies were not prepared, right, for that. And so that is still very fresh in the back of their minds. And so we don't want to be unprepared for what might be ahead. So companies are beginning to buckle down. So what does that mean? They're becoming very conservative on their spending. They're beginning to cut costs. So we're going to see more layoffs in the upcoming months. We've already seen thousands of layoffs, not just on the government side, in the private sector as well. And so that's not good for the economy either. So what I would say now is going to be the time for all of us to buckle down as well. So as these companies are reducing their expenses and they're being very cautious on how they spend money and how they navigate their finances, we as consumers need to do the same thing, right? So that means scaling down your spending, focusing on protecting yourself, building up an emergency fund, and just preparing for whatever may come our way, because no one knows at this point. So that's my little tangent for the night. Next big story, gold is at an all-time high. So gold did hit $3,000 per ounce. That is the highest gold has ever been. And so gold is one of those investments that people gravitate to during times of uncertainty. So if you didn't see my live from earlier this week, we had a whole conversation about gold, why people invest in gold, why you should consider investing in gold. So I'll just do a little bit of a quick recap. So gold is one of those assets that always has value. right? Unlike things like stocks and real estate, those values are contingent upon something, right? So a stock is only valuable if the company itself is doing well. When a company goes bankrupt, right, the stock is now worth zero, right? The real estate market, those homes and properties only have value if it's a good, well, they always have some kind of value, right? But your property can be demolished and then be worth nothing. Whereas gold, regardless of where you are in the world, where you are in the country, gold itself always has value. So you will always be able to liquidate your gold for cash in the event that you need money, right? And so that's one of the reasons why investors gravitate to gold when times are rough, when the economy is bad, when the stock market is volatile. It is a safe investment, right? It doesn't matter what's going on in the market around you. The value can go up, the value can go down, but it's never going to be zero, right? Gold has intrinsic value regardless of what is going on in the economy around you, whether stateside or abroad. So it's a way to kind of have a safety net, if you will, as an investor. So that's one of the main reasons why people do invest in gold. And whether the economy is bad or not, you should be investing in gold regardless, in my opinion. It's a great way to diversify your portfolio, right? Your stocks kind of do this, you'll have some good ones, you'll have some bad ones, but gold is kind of like that stable piece. If you think of your investments as a pyramid, right, gold and your emergency funds are kind of like at the base, right? Those are steady, they're stable, they're going to always have value, and it kind of keeps you in a safe space when the economy is really volatile. So really think about investing in gold. And when you think about gold, there are various ways to invest in it. So yes, you can go out and buy gold coins, gold bars. Costco, funny enough, right? They sell bars and coins. Most brokerage accounts give you the ability to invest in gold. So for example, Fidelity, you can buy different kinds of gold coins. Now, when you're looking to buy physical gold, you want to make sure that the purity is 99.99%. That's how you know it is investment grade gold. Now, if you're looking to buy gold jewelry, for example, you do want to stick to 24 karat gold, as that is the purest form of gold you can possibly buy, and that will have the most value. Now, if you're not comfortable in buying physical gold, you can invest in companies, right, that mine, process, and sell gold. So you're kind of investing in gold indirectly, right? So you can kind of do that. There are various companies on the market. Many of them pay dividends, which is pretty nice. There's also a company called Vaulted. So I learned about Vaulted a few years ago. And what I like about Vaulted is you're able to invest in gold even if you are working with a smaller budget. So to kind of go back to what I was saying before, right? An ounce of gold right now is $3,000 per ounce, which is pretty expensive. So if you're not at the point where you can buy a full ounce, Vaulted makes it possible for you to invest in gold in smaller increments. So let's say you only have $25 or $100, you can buy $100 worth of gold in your vaulted account. And so what's great about that is, every pay period or once a month, you can buy small increments of gold. And over time, you'll eventually have one full ounce and you can kind of keep going from there. So it's definitely a great platform. The gold they're selling you is investment grade gold. So it's 99.99% purity. They also sell silver, which is great. They added that to the platform, I want to say last year or at the end of 2023. I forget. So again, a great way to diversify your portfolio. And again, the best thing is you can invest in small increments. Now, if you do decide you want to have that gold shipped to you because, right, they physically are holding it for you, they will do that for a small fee. Now, when I do end this live, I will put a link. I think I have an affiliate link, I believe. So I'll put that in the caption so you can check it out. Very user-friendly platform. I personally like it. It's not sponsored by any means. I'm just telling you from my experience, it's definitely a great app and an easy way to invest in gold and silver. So with that being said, let's move on to story number 3. So Tesla, right? Tesla has been the big story this week as well. the White House became a mini Tesla showroom, right? Earlier this week. That stock has really taken a beating since December of last year. The stock is down 50%, which is crazy when Tesla has always been like the rock star. It has always been the stock that everyone was excited to own. It has definitely fallen from grace. And of course, a lot of that has to do with Elon Musk now in the White House and doing what he's doing. I don't want to make this political, but it's definitely impacting Tesla as an organization and as a business. So much so that Tesla sales are down across the globe. Even though in countries in Europe, EV sales are up, but Tesla sales are down dramatically. I think on average, it's down like 50% from just a year ago. So Tesla is definitely suffering right now, which is why I think they were doing that little PR move at the White House, but I don't think it's really helping. But it was a nice attempt. Now, what I will say is that it's kind of not safe to own a Tesla car right now. We've been seeing lots of protests, not only at their plants and facilities, but there's been like vandalism, right? There's been arson, there's been vandalism, like breaking windows, slashing tires, people driving down the street, and random people are damaging their cars. It's been pretty wild to see. So if you have Tesla stock in your portfolio, I'm sure you have felt the financial hit. Now, what I will say, I'm not going to say that I'm for or against Tesla. I try to kind of stay neutral when I talk about certain things. But what I will say, not just Tesla, but the stock market in general, the market is taking a hit. But now is a great time to invest in certain stocks if you've been kind of wanting to get in, but things are kind of expensive, right? The market has been overinflated for quite some time. I think the market did a quick not a quick, but did a big rebound since COVID. But there's been a lot of extra money pumped into the market by the government, causing lots of things. We won't go into detail. We don't have that kind of time today. But now is a great time to get into certain stocks. Things are really on sale right now. And I know that might sound counterintuitive. People tend to only want to invest in the market when things are good, which is kind of crazy, right? When the market is up, things are in the green, everyone's excited to buy. Oh my God, oh my God. But when the stock price comes down, that's when it's at a discount, right? And so let's start thinking of the stock market in that fashion. When everyone else is panicking, that is your time to like get in and start buying and buying strategically. So you kind of have to do the opposite of what everyone else is doing. And I know that's kind of hard sometimes. You're watching your portfolio decrease in value. It might cause you anxiety. It might cause you to be scared or nervous. And those are all valid feelings. But if you look at the market overall, we are still up from where we were a year ago, right? So there's that. And two, this comes with investing, right? The market doesn't go up in a straight line forever. It is going to have pullbacks. And when it does pull back, that is your time to invest at a discount. And so you have to start thinking of these times as a Black Friday sale. When you think about Black Friday, you don't want to pay full price, right? You want things at a good price. You want a discount. You want a sale. You want it on clearance. So right now, the stocks are on sale. Now, will they become cheaper? No one knows. They could go cheaper. They could become more expensive, right? It's part of the game. You can't game or time the market, but what you can do is invest consistently and just know that wherever the market is now, it will rebound eventually. So really think about that as we're navigating what's going on right now. While there is a lot, now's the time to really buckle down and focus on how can you take this time and make it to your advantage. So there's that. So what else did I want to talk about? So I think that was it for today's live. So we'll kind of just do a quick recap. We talked about Southwest, right? They're now charging check bag fees. Now, even though customers are not happy, Wall Street is. The stock price did go up about 2% after the announcement, and only time will tell if this is actually going to work in their favor. We also talked about tariffs. I think that will be a conversation we're going to have like every single week until I don't know when. Lots of activity going on right now, which is causing the markets to be very volatile. and the talks are still ongoing, right? So we're threatening to put tariffs on champagne and liquor from Europe, right? Europe is taking their stance on this, and they're putting tariffs on American goods like farming goods and alcohol. So it's one big mess. There's a lot. And I think there will be more negotiations, but I think all sides are really playing hardball. And unfortunately, we all kind of get stuck in the middle of that, unfortunately. We also discussed gold. So, gold, great time to, well, not a great time to buy because now it's expensive. But if you are not investing in gold currently, you should seriously consider beginning to do so. And even if it's not just gold, think about silver. And there are other there are other precious metals and stones you can also invest in, right? Palladium, nickel, right? Diamonds, right? There are other ways to invest besides just gold and stocks, right? The whole idea is to diversify your overall portfolio. And then we discussed, the Tesla conversation. It's at a really cheap price right now, relatively speaking. But I would say continue to invest. You cannot be scared. Really focus on what's important to you. Do your research and just stay the course. That's the one thing I would say. We kind of gone through this already with the pandemic, right? Going back to 2020, the stock market took a huge hit, and it has rebounded in the last 5 years. Now, at the time, I know it's going to rebound, right? Things are really bad. It was all doom and gloom. We had no idea what was going to happen in the next year or two. We were on lockdown. People were dying. There was just a lot going on at that time as well. And here we are 5 years later, going through something else tumultuous, right? But things seem bad right now, but they aren't always going to be this way. So you kind of have to remove your emotions from what's going on right now. Now, those feelings are valid. I don't want to invalidate anyone's feelings. Those feelings are your feelings. You deal with them, you sit with them, you cope with them. But the money part, you have to stay level headed. You have to stay the course and really focus on what's most important in this season. Now, in this season, maybe investing isn't your number one priority. Maybe it's saving and building up your emergency fund. Maybe it's paying down debt, or it could be all free. I don't know. But only you know what's most important right now. And that has to be your number one focus. And everything else, while you're paying attention, you can't let that consume you, because then it kind of leads to analysis paralysis, and then you're not doing anything at all, which is, of course, counterproductive. So that is it for today's live, guys. We'll be back next week, same time, same place. Now, if you have any suggestions on what we could discuss in next week's conversation, feel free to put it in the comment section. I will be live again on Tuesday. Let me double check my calendar. I believe it's Tuesdays. Tuesdays at 9 Eastern is when we do go live. I don't have it scheduled right this second, but I will schedule that this weekend. So if you have any suggestions on future topics, of course, let me know in the comment section down below. And I will talk to you guys next week. Take care.